here's the rub of it. The quantity of metals and minerals you need to deliver a unit of energy to society using wind and solar machines, batteries, is increased by 1,000 to 7,000% over the quantity of metals and minerals you need to build the machines of the hydrocarbon era. Huge increase in metals and minerals required to deliver the same quantity of energy. This is the key.
In June 2023, I hosted 6 interviews, which became known as the Net Zero Delusion series. At the time, the videos were for subscribers' eyes only. The basic idea was simple. The writing was already on the wall for net zero. The real question was how it would fail and how investors could position themselves to profit from this. These days, net zero is falling apart before our very eyes. Not a day goes by without news of all the different ways that it's failing. That means the investment ideas we presented in our series back in 2023 have now begun to play out. So, did our experts get their predictions right 2 years ago? We invite you to watch the Net Zero Delusion series for yourself to find out. Hello and welcome to the first video in this series about net zero. Ever since governments committed us to net zero, a long list of experts have been busy doing the maths on whether that's even plausible. They come from a variety of disciplines and persuasions about climate change, but they all claim to the same conclusion. Net zero is not plausible, but it is going to get us into a right mess, to put it mildly. In order to highlight just how absurd net zero is, and what the implications of attempting to achieve it will be, especially for investors, I decided to ask these experts some of the tough questions that their analysis poses for people like us. You won't like what you're going to hear from them, but at least you'll know how to profit from it. So let's begin with the analyst who began the trip down the rabbit hole for me personally. Mark Mills gave his presentation, The Energy Transition Delusion, Inescapable Mineral Realities, to a Norwegian funds management firm. In that presentation, which is freely available on YouTube, Mark lays out his argument for why the net zero energy transition hasn't begun, isn't happening, and can't happen in the future. In my interview with Mark, we examine his arguments and dig into some of the bizarre politics of net zero, which Mark's time at the White House helps him understand. That's right, Mark Mills served in the White House as science officer under President Reagan. These days, he's a senior fellow at the Manhattan Institute, a faculty fellow at Northwestern University's McCormick School of Engineering and Applied Science, a strategic partner with the energy tech venture firm Montrose Lane, co-founder of venture capital firm Digital Power Capital, and was chairman and CTO of public company i6 Technologies. Mills also briefly ran a battery company as interim CEO, so he's not a complete dogmatic skeptic about energy storage. But as you'll see, it's his ability to put things into perspective that'll make him so valuable on our journey to unravel net zero. I hope you enjoy it, but I doubt it. The energy transition is underway. By 2050, we will have saved the world from fossil fuels as renewable energy takes over. Isn't that right, Mark Mills?
I don't know about saving the world, but we're not replacing hydrocarbons, which everybody calls fossil fuels. I understand that, but I'm partial to the word hydrocarbons. They're not going away. Even President of the United States, in a fit of, I don't know, we'll call it candor, during the State of the Union address this year, said it's going to be around for a while. And the Secretary of Energy here went on the road, said the same thing. So even in one of the most ambitious nations now of the, quote, energy transition, we have an admission about the reality that a lot of hydrocarbons are going to be needed for a long time.
It almost makes me worried if the politicians are acknowledging it, whether it might not be true. But let's move on to the report card of the energy transition so far as you see it, because a huge amount of money has been invested. Are we getting much return on it?
No, it's a bad investment so far, and it's going to be a bad investment for a while yet. First, because we haven't really changed the structure of the world's energy systems in any significant way. If this is a Western world affectation, the rest of the world is not really following us. And what we've done the last 20 years in Europe and the United States collectively is spend between $5 and $10 trillion so far to avoid using hydrocarbons. And this is the singular fact. 20 years ago, 86% of the world's energy came from hydrocarbons. Today, 84%. So, we got 2 percentage point decline. It's something. $5-10 trillion, pretty expensive. Transition. Problem is the word transition is not in evidence in the data. So a 2 percentage point decline in global energy dependence on hydrocarbons isn't a transition. It's not an accelerating transition. It's not a nascent transition. It's not a transition. And in fact, the absolute quantity of hydrocarbons consumed by the world over the last 20 years has increased by a quantity equal to adding 6 Saudi Arabia's worth of oil production in energy equivalent terms. So both happen, right? We got lots more wind and solar, and lots more electric cars, we got lots more oil, gas, and coal produced and being consumed. It's an energy addition, not an energy transition, is what's really going on and what will go on for a long time.
Have we at least learned anything about the future based on the energy transition as attempted so far?
Yes, we've we've learned that pushing too hard with subsidies to add wind and solar to grids makes electricity more expensive for consumers. Consumers in Europe, in particular, are quote enjoying that. Uh, Consumers in American states, where the share of wind and solar have risen significantly, are also seeing higher electric rates. So we've learned that it's very hard not just to change society level structures of energy systems, but pushing too hard, too fast on things that are sort of fundamentally expensive, and that is at systems level they're expensive, has consequences, not least higher costs, but also lower reliability and greater fragility. In fact, the story behind the challenge that Europe is facing after the Ukraine invasion, setting aside the immorality of the war and the attack, but just looking at the functional effect, the fact that Europe has had such a difficult time adjusting is not just the loss of cheap gas from Russia and cheap oil, but the fragility of the system that Europe has built, which did not have the resilience and the ability to respond and shift fuels quickly. So we built lots of windmills and solar panels in Europe and England. They can't be surged. I mean, one of the problems of the real world we live in, whether they're exogenous events from bad actors like the Russians, or they're exogenous events from nature, or just accidents, interrupting fuel supplies and energy systems, is you need to have resilient systems. In an odd way, despite the impression that the sun is always there and the wind's always there, the systems built based on them are more fragile. They're more difficult to provide the high reliability, the high resilience that societies need to thrive and prosper.
You described the energy transition as one from going from liquids and gases to solids. So, turning to the future, then, what do you mean by that? And is it going to be achievable?
Well, what I meant first, before whether it's achievable or not, let's talk about what I meant by liquids and gases to solids. So the energy system of the world is heavily dominated by petroleum and natural gas. They together account for more than half of all the world's energy, which is really quite remarkable. It's a huge infrastructure and ecosystem to deliver lots of liquids and lots of gas. Liquids and gases are easy to move. They're easy to pipe. They're easy to put in tankers. They're easy to store. They have a very nice feature. And these particular liquids and gases, hydrocarbons, are very energy dense and remarkably safe considering how energy dense they are. So it's been a very interesting evolution of the last century of the world's energy systems choosing. This has not been forced to anybody. Markets and technologies have chosen these very, very dense, easy to store, easy to transport, low cost materials, liquid petroleum and natural gas. Renewable energy depends on building machines. Like all energy systems, you have to build machines to get gas out of the ground and move it. You have to build machines to burn gas. The renewable energy systems aren't renewable. So this is the misnomer and the sort of the nomenclature. There's somehow something special about renewable energy because it's renewable. Okay. Renewable energy sources are free. The sun is free. The wind is free. It's just there. This is true. It's beyond obvious. Oil is free. So is natural gas. We didn't create the oil or gas. We didn't put it there. We have some idea how it got there, but we had nothing to do with it, and it's free. The cost to using oil and gas is identical to the cost of using wind and sun. You have to get permissions to use land where it's usefully in abundance, and you have to build machines to put on that land to convert the resource into useful energy for society. Because you have to build machines, and because machines always wear out, the universe we live in, That's not renewable. Machines have to be built. Machines are built with materials extracted from the earth. You build the machines, they wear out, you repair them, you throw them away, recycle some of it, build new ones. So you have this do loop, if you like, of constantly have to mining new materials to build the machines that get you the energy. In one case, again, the energy is moving air or moving water, the sun. The other case, it's liquids buried below the ground. But that's in a weird way, it's a detail. What you want to know is how much metal, how much material do I need to mine from the earth to build the machines to get a unit of useful energy to society, a unit of heat for building, an hour of lighting up a computer, an hour to keep light bulbs going, an hour of a ton of steel making. It's the delivered energy to society is the goal, and the quantity of minerals and metals needed to be mined to make the machines to do that. That's the key, because that's where the money is tied up. And by the way, that's where the environmental impacts are. So with that long predicate, here's the rub of it. The quantity of metals and minerals you need to deliver a unit of energy to society using wind and solar machines, batteries, is increased by 1,000 to 7,000% over the quantity of metals and minerals you need to build the machines of the hydrocarbon era. Huge
That
increase in metals and minerals required to deliver the same quantity of energy. This is the key.
and that the timing matters as well, right? Because in order to build the wind turbine or the solar panel, all of that needs to be there at the very beginning. Whereas for hydrocarbons, you're using extraction processes that take
Right.
time over long periods of time, and so there's sort of a big marginal difference in the sense of risking a sunk cost and being able to control the production of hydrocarbons. So it's almost like a marginal analysis sort of issue,
It
right?
is. No, that's a very good point. And of course, the timing issue is the crux of the challenge that the local energy transition has, because it is beyond obvious, as you point out, that with oil and gas, I use far less machinery, but I have to use it on a regular basis, right, to extract the liquids from the ground because the wells deplete, and I keep using the machinery. So you spread your capital expenses out over time, and but and the quantity of metals you need for the machinery up front is much smaller. So you have it's sort of for all of us, the time value of money matters. I mean, everybody knows that over their lifespan, they'll earn more money than they get tomorrow. It'd be much nicer if somebody handed my lifetime's earning up front, but that doesn't work in the real world, right? That's a lottery system, but that's not what happens. So the fact is, you're right. So not only do we have to extract more metals, minerals per unit of ultimate energy delivered, I have to do it all up front. I have to build the wind turbine up front. And the fact that it'll run for 20 years it's important. I mean, its operating costs are relatively low. It doesn't have fuel costs of any significance. There's fuel costs associated with maintenance, but they're minimal. So it's an arbitrage of switching long running spending versus all up front, which has a very real cost. The capital is critical, especially as interest rates go up in inflationary periods. By chasing more minerals up front, you cause inflation. So imagine, even if it were the case that the quantity of metals and minerals I needed for wind and solar is the same as for oil and gas. But what I do is say I need them all now. I need all those metals up front to build the machines rather than over a period of 20 years. That's a problem. It creates inflationary pressure on those metals and minerals. But the problem is exacerbated by the fact it's not that I just need them up front, to your point. I need 10 times more of the metals and minerals, not just 10 times of rare stuff. People have been focused on the rare earths, which, let me just stipulate, are not rare. They have rare properties. We rarely mine them in the West. We let China mine them, but they're not rare. These are choices, but this is a misdirection. The minerals that we're talking about are very basic common metals: copper, nickel, right, aluminum. These are where tremendous increases in demand come because the energy sources, wind and sun, are very diffuse. So you're building much more hardware to capture the same amount of total energy, and the hardware is made out of metals and minerals. So it's an unavoidable feature of those technologies. It's not ameliorated by being clever. It's just built into the nature of those systems.
So let's move on to whether it is achievable or not. Most people would have no idea whether a tenfold increase in the mining rates of these
Right.
metals, even if we ignore the fact that we need them yesterday, is it achievable or not? Are we going to pull off the mining explosion that we need in order to achieve net zero?
Well, the is it achievable question um, has sort of two obvious answers. One, in theory, if we devoted the resources, that's financial, industrial, and political resources, uh, could you do it in principle? Yeah. I mean, at a warlike level of industrialization, with no permitting delays and paying no attention to the environmental impacts of mining, which are well understood and well known. If you just strip all that stuff away and say, could we in principle get enough copper in the next decade or two? Maybe. Probably the maybe is a 10% chance, a 1% chance. Again, it's stripping everything away. But in the real world we live in, where we have environmental regulations, we have permitting, we have labor challenges, we have capital challenges. The answer is no, it's not possible. The world is not close to mining enough materials right now. This is what's critical. It's not that we're not mining enough right now. We have an increased demand coming, let's say, for copper of 200 to 300%. Could we increase the world's mining sector for copper by 200 or 300%? Yeah, sure, in principle. Are we? No. This is the critical thing. It takes 10 to 15 years to open a new mine. IEA says the average is 16 years. This average globally is 16 years. So you'd want to know, are the world's mining industries expanding their mining right now, by a quantity sufficient to provide the metals? And we know the answer to that because there's lots of businesses that track mining capital investments. And the answer is unequivocally no, and not even close. So we're not doing that. And so you'd say, well, why not? Well, maybe it's that they know something a lot of other people don't know, is that politicians and governments might change their mind about encouraging and forcing it, the quote transition, long before they get through their 10 years of multi-billion-dollar construction on a mine and find themselves stranded with billions spent and no demand for the excess production. So they're going to be pretty cautious. If it was your money, you might be cautious. So it's if I were to reduce it to just my opinion, it's impossible. It's impossible not because the physical resources don't exist in the Earth's crust. There's lots of copper in the Earth's crust, but you have to find it first, and you have to qualify. Then you have to get machinery there, wherever the there is. And the there is not in Europe. It's not in the United Kingdom, and it's not in Canada, and it's not in the United States. Most of the new mining has been in China, Asia, South America, and Africa, where frankly it's been easier to mine, easier to circumvent environmental regulations, easier to circumvent humanitarian rules, easier to push uh, practices into labor that we would not only not allow, but find horrific when we discover it.
There's a couple of other reasons that I know you've talked about. Mining generally is struggling anyway because of declining ore grades. So we've mined easy deposits. You also mentioned, which I found interesting, the idea that mining is going to become dramatically more energy intensive in and of itself. So it becomes a self-feeding problem, right? The more we try and mine in order to produce more energy, the more energy we need in order to mine. So uh, based on that, it doesn't seem particularly viable, even theoretically speaking.
Well, it is theoretically viable. So let's be clear. The world's mining industry has become more energy efficient, more cost efficient over the last century. And the total quantity of minerals that have mined have increased by astonishing quantities. The world is much bigger. It uses a lot more stuff. But that's over a century, not over 20 years or 10 years. And from a level that was a lot lower than where we are today. Uh, I have no doubt. In fact, I've written, I've said, I'd like to find a place to make these investments. They're harder to find. The, I think the world's mining industry is at an inflection point, along with the rest of the industrial sector, for profound improvements in economic efficacy and material efficiency and energy efficiency. But it takes time to implement in the industrial sector, structural changes that are not incremental, but they're structural new techniques. Uh, we know it's possible. It's just not possible in a few years or 5 years or 10 years. These are slow moving industries. The trucks you use in mining are cost millions of dollars each. They last for 30 to 40 years. You don't replace them overnight. These are long cycle industries, very capital intensive industries. So it is true that the energy intensity of mining is rising. We'll fix that problem eventually, but not in a decade, and not easily. And that matters given the velocity that regulators and politicians are imagining. That, for example, mandating that you have to buy an electric vehicle the next 10 to 15 years. So that'll increase the demand for copper per car by 300%. Copper's got to come from somewhere. It's going to come from the next marginal ton of ore. And ore grades, that is the percentage of the rock that contains the metal, are declining and have been declining for a century. And as ore grades decline, to your point, you have to dig up more rock. I mean, think about it. If I go from 1% ore grade, which means a pound of copper requires mining 100 pounds of rock, then I go to 0.5% ore grade, then I'm mining 200 pounds of rock to get the same pound of copper. That means you're digging up twice as much stuff. That's inherently, if nothing else changes, twice as much energy is used. And you have to grind up twice as much rock. You have to dissolve the rock with sulfuric acid, using twice as much sulfuric acid. So this chain gets more difficult, more expensive. We probably will find workarounds on those things in the coming decade or two. I'm quite confident we will, in fact, especially with artificial intelligence and new computational abilities to push the boundaries of chemistry. But it takes time, and we need the copper now for all the electric cars we're requiring people to buy now. So what will happen is we'll increase the demand for copper faster than supply. Every analysis shows this. This is not a guess. Within the next couple of years, the world will be short copper. We know what happens when you're short a commodity. Prices go up. They stay up for as long as demand exceeds supply. So what that would say is they'll stay up for as long as people and governments tolerate extremely high priced metals. And they're not going to get enough metals supply is not going to respond in time. Supply will take years, decades, as we've talked about, to respond, which means unless politicians can tolerate a decade of commodity hyperinflation, they're going to have to give up on the demand side. The demand side is solved with one of two techniques: stop pushing the mandates, which consume the copper, solar panels, windmills, and electric cars, or you create a depression. Depression solves a demand problem. Anytime there's a depression, commodity demand goes down. That's uncomplicated. And then prices relax because you're oversupplied because people are poor.
This is one of the key themes of what I've been focusing on at the newsletter, is that choice between the two. And I wouldn't call it a depression. I'd call it imposed energy poverty. The idea of
Sure.
restricting what people can do with their allocation, their ration of energy that they get, and trying to sort of squeeze the economy into the box that the
Right.
net zero or the road to net zero can provide. Um, I want to focus on the word delusion for a second, and it's a word that gets used a lot in climate change related debates, but you use it in a very specific sense. You're
Yeah.
talking about the delusion of specifically this resources challenge, right?
Right. So I'm using the word delusion in its semantic sense because I think words have real meaning. So we're being told we're in an accelerating energy transition. When you look at the data and you find out, as I said earlier, we went over the last 20 years. I mean, if something's accelerating, it should be in the data. So 20 years ago, 86% of the world's energy hydrocarbons. Now it's 84%. 2 percentage point change. That doesn't look like the definition of accelerating exponential change. So it's delusional to call that an accelerating transition. It's also delusional to call it a transition. It's an addition. What's happened over that time, we've added wind and solar and electric cars to the world's fleet of other energy producing and consuming machines. So it's delusional to call it transition because it's not happening. Now, the third delusion is to think it could happen in the time frames claimed. So when I say that it's delusional to think it can happen, it's not that people are suffering from some kind of I don't know. Well, let me call it. They are suffering from a form of myopia that when you look to the future, to use the analogy, you're trying to see it clearly. Well, if you want to see it clearly, you have to think about how big systems respond. They have inertia built into them. Based on what we've seen in the last 20 years, it's very predictive of the future. We could triple, quadruple the spending we've been putting into alternatives to hydrocarbons. And in some countries like the United States, we're doing exactly that right now. But it won't, and it will simplistically accelerate, right? It'll accelerate whatever's going on. Of course it will. We're going to have more windmills and more solar farms and more electric vehicles. It will accelerate that. But it won't accelerate a quote transition because the transition isn't happening. And it won't, even at the level of spending it's imagined and being proposed. The point of the transition is that it means from something to something. And that is specifically meant away from using hydrocarbons to principally using non-hydrocarbons. And that's not going to happen, even with a quadrupling of the spending, even with the imagined spending and mandates that are being pushed by the IEA in many European nations, in many US states, and by the US federal government. it will not result in a transition away from using hydrocarbons. It will reduce the share of hydrocarbons, and it might even reduce the absolute consumption of hydrocarbons. It's possible. I mean, if you spend enough money, you can, at a price, you can reduce the absolute consumption. But it will not, arithmetically, in any of the models that people are showing, result in the hydrocarbons being the minority share or zero. It'll be still the majority share of world's energy 20 years from now. So the idea of a transition as a rhetorical talking point is proof by PowerPoint. I get that. I understand why people are saying that they want that. What I deal in are the facts of what's actually happened. They're relatively predictive in terms of what will happen in the timeframes that are meaningful, and the facts of what's actually possible with the kinds of systems that we know how to build today, which is not the same as saying that there aren't different kinds of technologies possible someday. But what you're going to build tomorrow with the billions of dollars is what you know how to build today, not what you imagine is going to be better, because you don't build the imagined new thing tomorrow. You invent the imagined new thing, you take time to prove it out that it's going to work, and then you start building it. And those timelines in the industrial world, which is where the energy world is, take decades, not months.
We should quickly mention as well that you're not against EVs and you're not against renewables. You just think that they have their place and we shouldn't go beyond that. I want to ask you about something that I haven't heard you talk about, I don't believe, which is how did governments and the people that created these mandates and these targets, how did they get it so wrong? How did they ignore the implications of what it would actually take in order to reach what they decided we will all have to reach?
Yeah, well, this is the political psychology and private psychology question, not the physics question, as I'm often want to say, because it's I have opinions on this that are not anchored in data, but experience and anecdotes and what I've seen in public policy. Look, there's two parts to this. One is the narrative, the story, what people want to believe and think they believe, and then there's the political part of what governments do and how they operate. And they're related because governments can only operate based on a narrative that people accept. So that matters. And of course, people's narratives are influenced by what governments say and tell them. But they're sort of independent magisteria in a sense. Because first of all, narratives apply to, stories that are, good movies, good stories, stock picks. The so-called story stocks are narrative stocks, right? Tesla is a great story stock as well as a great company. It's a valuable company. He's done something nobody else has done in a century, built an automobile company that actually builds cars at scale that people will buy. No one's done that. I mean, and the subsidies don't explain it away. He's built an impressive company, an impressive industrial entrepreneur, the first order. And a lot of credit due him and his team for that, in my opinion. I happen to like what he's done and admire it. I think Teslas are fine as a car, by the way. I'm not, they're really, they're really fun to drive. I don't find them particularly comfortable, just as an aside. Other electric cars I've driven are more comfortable. But, that's why there's hundreds of models of cars, because everybody has different tastes. But the point of the narrative is that it's a seductive narrative to say that the fossil fuels, the old fossil stuff, is old. Is an inevitable transition away from the old stuff to the new stuff, and it's on the cusp. It's here now, and so we use words like clean tech and energy tech. So we're now invoking the magic word of computer and communications technology, which do have different velocities of market adoption, because we're dealing in the world of bits, not in the world of atoms. And you can move bits faster than you can move atoms. Setting aside that you have to build atoms machines to make the bits, set that detail aside for a minute. But it's seductive because there's been so much that's happened that's so remarkable in the tech world as defined in the popular narrative. So that whole narrative just seems right. We coal is old; it's been around forever. So my response to that narrative, and it's a good narrative because it is seductive, is that we don't have any new ways of making energy. We have better ways using the old fuels. I mean, we've known how to make solar photovoltaic cells since 1950s. They've just gotten cheaper, which is good, but it's not new. And it has limits. The same limits apply then and now. That even at low costs, they have limits to their scalability because obviously they only work when the sun shines. And one of the things you pursue in energy markets is supplying energy food and fuel when people want it and need it, not when nature feels convenient to provide it to you. So one of the great achievements of human history in the energy tech domains has been supplying energy at scale at a price that markets can afford and when the markets want it, not when the supplier wants to supply it to the markets. This has been the singular achievement of humanity. So the problem with wind and solar is they can't do that at scale in terms of replacing hydrocarbons, but they can do it at scale up to a point. So very significant shares of electricity are coming and will come from wind and solar. But anyway, the narrative the narrative is seductive. It really is, and it sounds right. It seems right. So you're prepared to believe it. Electric cars are different than internal combustion engine, except they're really not. I mean, they're less convenient. They're, in every respect, they're less convenient for most drivers, but doesn't mean they're more fun, not more fun and more convenient for some drivers. But it's not a different technology. It's not a tech in the same as a discovery of computers. To be trivially simplistic, the electric car is functionally equivalent of the dawn of the auto age in discovering a new way to feed horses and deciding that's a revolution when the car was around the corner. Fueling a car with a different fuel source is not a revolution. It's an evolution. It's important. It's different, but it's not a revolution any more than feeding horses different feed from different countries was a revolution. Although it would have been impactful if you had to get your food for the horses from non-domestic sources way back 200 years ago. So the other part is the political part. So the narrative seductive. Set aside that all markets have people who are storytellers that have a book to pitch. If you make windmills, that's your book. If you make batteries, you sell the book. I mean, this is an old obvious thing. Everybody sells their book. I get that, and I try not to fall down that trap because it's easy to do. It's confirmation bias. And there's nothing wrong with windmills. You should sell your windmills. You got windmills. But when governments get involved in picking the winners and losers, instead of the markets pitching their book and consumers buying or businesses buying what they think they need at a price that's essentially, in a market competition environment, when the governments get in and say, oh, no, you can't buy that kind of electricity. You have to buy this kind of electricity. You can't buy that kind of car. You have to buy this kind of car, which is where we've got. Then you get into profound distortions in markets. We know this over all time and all history. The real question that you're asking is, how do we get to this point on these energy technologies? The obvious answer is the word climate, because that is how governments have chosen to manufacture policies that purport to change our energy systems. They're wrong about it solving the climate problem in every respect, solving it in that it cuts carbon dioxide emissions significantly. The plans don't. They're wrong in the claims that it's cheap. It's not. It's demonstrably cost more. Everywhere there's more wind and solar on grids, electric costs have gone up. But why did they get it so wrong? I would actually invert it, to be facetious. When it comes to these kinds of things, I would challenge you or anybody who's listening to give me a list of examples when governments have made these kinds of bets at the macro level of economies, controlling them and got it right. So we have a good 50 years of energy forecasts and plans in the Western world's governments. The United Kingdom, my homeland, Canada, former part of the, still part of the Commonwealth, and the United States, all over Europe, got forecasts. I've got shelves groaning with copies of books and documents I've collected over the decades of energy forecasts. And the most common characteristics of the government forecasts on the macro things, on big changes, is that they've been serially wrong. They get it wrong all the time because they get blinded by short-term objectives. They get blinded by political manipulation, blinded by political aspirations, by lobbying, all the things that are part of free markets. The advantage of a free market is if markets can function, when they're wrong, we can adjust. It'll cost us some money. But when the government is doing it by diktat and it's wrong, it's very hard to adjust. It takes epic levels of political effort to reverse government mandates.
You're preaching to the converted here. The bit I really want to ask about is they didn't even seem to consider the challenge of where all these resources are going to come from. The furthest they got to was projecting how much more in resources they would get. I think you argue it's going to be significantly more than they project. But nobody ran the numbers, as far as I can tell, on on how much mining, because I mean they would have encountered the problems that you've
Yeah.
pointed out, and there's quite a few people now. Ever since governments have decided what the mandate will be, what the target will be,
Right.
there's a few people who've actually gone back to their computers and sort of run the numbers on the resources demand this implies, and they've all got the same conclusion that it's not
Right.
going to happen. So
Right.
how did they ignore that?
Well, I began writing and talking about this a long time ago because I'm I'm sort of I'd say the one characteristic of my work and my writing and my book, The Cloud Revolution, which we can talk about later, is I'm interested in how things work. So it's just been an affectation of my life of back when I did real work, taking things apart or building things. How do things work? How to especially technologies? How do they work? And it's just fascinating. When you do that kind of research, when you're looking at upstream on the fundamental level, that's when what I saw, and I wasn't alone, just doing the research of other researchers. The data were there; they've always been there about the energy and material intensity of the so-called green path, the transition path. But it wasn't until the IEA, and I'll give them credit for this. In 2019, they published a study looking. The staff did a very good piece of work on the mineral intensity of the transition. And in fact, they haven't updated the document. They've updated it for specific supply chains, like the battery supply chain. But the master document on critical energy minerals is still very good. It's only a few years old. None of the facts have changed since they issued the document. And it was extraordinarily well done. Lots of terrific data in it, pointing out all the facts that I've been pointing out and others about the metals intensity, the fact we're not mining enough, that the mining ore grades are going down, and the red flags. But that data didn't make it into the executive summaries, right? The way it gets couched is we have to do a better job in Europe at mining. Okay, so what the European Union has done, to their credit, is decided, okay, well, we should mine more. So they've instructed the central banks not to, you can't loan money to oil and gas exploration, but you can loan money in preferred terms to minerals exploration, and you can provide expedited permitting for mines. Okay, good on them. I mean, they've actually acknowledged it. There are EU studies now looking at the fact, and in fact, I just read the most recent EU forecast on this, and they've decided with maximal efforts for recycling, the so-called circular economy, maximal efforts for building refineries for the metals and minerals in Europe, maximum efforts to accelerate mining in Europe, they might get up to producing 10% of the metals they need in the continent of Europe. They have to import 90% of it. So right now they're importing 5% to 98%, depending on the metals, 100% for most. So they're acknowledging that and just saying we just have to try. In the meantime, their admonition is that we have to have a more transparency in how other people do it. We have to do a border adjustment carbon tax on the metals that are mined in Africa and in China. Okay, how's that going to work out? If they're producing the carbon intensive metals over there, and you're going to need them for the cars and the batteries, and you tax that, you're going to make the cars more expensive. So the so-called inevitable collapse in the price of these green machines doesn't collapse, because what you do when you tax the metals that are mined and refined on carbon intensive grids, which is what's going to be the case for at least the next 20 years, even if they pledge the shift, these are long cycles. So they'll just make them more expensive, not cheaper. We know that. We know that because we know another fact that it's shocking to me that people just ignore this. They say we have Bloomberg and others acknowledging that batteries for electric cars got more expensive last year, are getting more expensive this year, and pointing out that's because of mineral prices. Okay, well, then they say, well, in a couple of years they're going to get cheap again. On what basis? On what basis? The basis has to be the assumption that minerals get cheap again. Well, since the cost of the battery, about 70% of the cost of the battery, is now just in the purchase of the metals and minerals, not the manufacturing, not the labor. That means the future cost of batteries is entirely anchored in your guess about the future cost of metals and minerals. Okay, all right. I'm all in for that gamble, except we know for a fact, because back to what I said earlier, the world's not mining enough, not planning to mine enough, not investing to mine enough, which means their prices will go up. There'll be oscillations. It's a commodity. It has volatility, but the net trend is up, not down. So how in the world do you get to the chutzpah to claim that there's an inevitable reduction in the cost of things that are anchored in commodities that we are not going to produce at scale that's required for these visions. It's utterly surreal. You asking what's going on in policymaking circles? First of all, I think they were ignorant in the semantic, not insulting sense of the word. They had no idea. They had no idea. A complete shock to them that so much metals were needed. And when they found enough people saying it who were credible, including their own analysts, they got stuck. They come to believe it. Then it's a shock to them to discover that the mining industry is not just going to overnight willy-nilly spend hundreds of billions of dollars to build enough metals production capacity over the next 10 to 15 years on a political aspiration as opposed to price guarantees. Shocking to them. I mean, this is infantile, it really is. But it was based on ignorance. They didn't know. So this has been an education process at a high cost to consumers and taxpayers all over the world. We will ultimately see, the denouement, if you like. And it won't end well because we get inflation on two fronts. We're going to get minerals commodities inflation, inflating the cost of the machines of the green revolution. So the cost of electricity, all the stuff's going to get more expensive. The simultaneous avoidance of adequate investment in hydrocarbons means we'll be undersupplying that as well, and those costs will go up. So we'll get energy inflation coming at us from both sides simultaneously. It will people will be looking for who to blame, and we'll be asking the question, why did they see this coming? Okay, it's because they ignored it. And when they were told it, they ignored it because frequently what will happen is if I say something like this, I'm accused of being in the pockets of the oil industry, of big oil, a shill for big oil. Yeah, if they pay me enough, I'll shill for them. They don't pay me bupkis. I mean, I give a speech to an oil conference, they pay me, but I don't work for the oil industry. I have some investments that are oil related in our venture fund, but they're also not oil related. We invest in software for improving the efficacy of resource extraction, whether it's oil, gas, or copper. We also invest in the efficacy of transparency of environmental monitoring in all resource extraction because that's important. So I have, in a sense, I have a dog in the race. I'm making a bet. I believe the oil is going to be around and it's going to be challenged, and gas will be around and be challenged and need more technology. Same can be true of same is exactly true of all the other energy technologies. The problem is those ones provide a trivial share of world's energy. Let's come back to the transition. 3% of world's energy as we stand today is from wind and solar, of energy, not electricity. 3%. Okay, that's not nothing in the world. It's a big world, but it's on the margin. And if it doubles or triples, which I think it will, we're going to spend the trillions. It will double or triple it to 10% of world's energy in the coming decade. That's not nothing. The people in those industries are going to make a lot of money because 200 to 300% growth is a lot of growth. Somebody's going to make a lot of money in that growth path, and good on them. There'll be lots more electric vehicles in the world too, and that's a good thing. But it won't be all electric vehicles. It won't replace gasoline, and it won't eliminate the use of oil, and it won't eliminate the use of coal. I mean, this is the political myopia to this is driven by the combination of the acceptance of the public narrative that there's some inevitability to something, which is not inevitable. It's just a difficult. Transitions have never happened. There have always been additions for all of history. But the inevitability of a increased share of the new is true. It's just a very long cycle. The political blowback, I think, that will ultimately come will come because of the economic and social consequences of bad planning. This is bad planning in the sense that the path that policymakers are trying to force on industries will cause consequences to consumers who are usually known in most of the world we're talking about as voters to be very unhappy. And it won't really matter what their opinion is about global warming and climate change. These are they're unrelated. As soon as you, and we saw this already in Europe, cause epic destruction to the reliability of energy systems and cause prices to go up.
It seems to me they work backwards. They accepted that we have to get to net zero in order to save the planet, which and then we need this sort of net zero transition, which means this energy system, which means oh no, we can't get the metal. What are we going to do? But let's leave that political side behind. The next thing I want to ask you about is
That's because it's so unproductive. But go ahead.
um, I want you to do a better job of explaining what I'm about to say, which is the idea that all of these resource challenges that you've laid out, they're not separate individual challenges that we can solve, with separate individual initiatives. They're cumulative because they're all focused on the same group of resources. So while any one of them might well be solvable, we might be able to transition the car fleet to EVs, we might be able to build lots of windmills and solar panels. They all use the same resources. And
Correct.
so all of these challenges accumulate. They all add together, creating one challenge that really is insurmountable. Is that accurate? How do you see
Yeah.
that?
So a few people have looked at this. I mean, usually you're right. It's looked at in isolation. I can tell you how much more selenium, copper, and different metals, silver I need to build a solar, 1,000 megawatts of solar versus 1,000 megawatts of combustion turbines. Just easy. But you're right. So the energy transition strategy is I want more wind, more solar, more grid scale batteries, and more electric cars all simultaneously. They all have a call on essentially the same suite of metals. There's some differences. You don't use much cobalt in big stationary batteries, and less in car batteries. You don't use lithium except for lithium batteries at all. I mean, there's uses for lithium, but they're de minimis compared to lithium batteries. But the big story is on the basic metals, especially copper, nickel, and aluminum, and steel for that matter. But the growth story that the world's going to have a hard time with is the copper, nickel, and aluminum. You know, electric cars are heavy, so use a lot more aluminum. They weigh on average 1,000 pounds more than a conventional car. So you can't tolerate that. So you use a lot more aluminum than steel, and you make the extra weight be more like 500 to 600 pounds by using lots of aluminum. Aluminum is very energy intensive and expensive, but that's just locked into the fact that the battery in an electric car weighs 1,000 pounds and it's replacing 80 pounds of gasoline or diesel or petrol in your land. But they are additive. So when you add them up together, and you can do that, one can, and there have been plenty of analyses. The Finnish Geological Survey did a very good study. I think it's 300 pages long. A very serious analysis of the additive impact of all the goals collectively in all the countries trying to do it at the same time on the resource call for all sets of metals and minerals. And their conclusion was the one you'd imagine they would reach based on what I've said, is that the world flat does not have, nor has proved, not only doesn't have the mines, it hasn't proved out sufficient amount of reserves. That is, gone looking for high quality resources and know where they are to even start digging the mines. There's a lot of work to be done. They didn't say it could never be done. They said a lot of work to be done, hasn't been done, and there's no record of it being done in a decade or even 2 decades for given the magnitudes. So it is a cumulative, and maybe the more important analysis is not what the magnitude is. If you start down that path, the demand pressure you put on all the same metals, what happens then? Well, the IMF did an analysis on this, which is really quite good. The economists in IMF took the energy transition plans, not the net zero plan, the STEPS plan, the stated plans, the metals demands for that, and accepted that would happen and looked at the cumulative demand for metals and used their economic models for the metals market, which is an extremely well-studied market. The price elasticity of metals is enormously well-studied. We've done it for a century. We know lots about the market dynamics and how markets respond, how the construction market responds, how the other transportation markets respond, how appliance markets respond to steel prices, how car is just really, really well studied because it's so damn important and it's so hard to increase metals production quickly. It's well studied. So they did a nice piece of work and just asked the question: since everybody's chasing the same metals, copper in particular, but again aluminum and nickel, and they sort of assume that markets will respond because markets try to respond. I mean, you make prices higher, you can bet there'll be marginal expansion. People will start spending money. It's already happening, but only on a minor basis. But they keep going up, and they stay up for a year or two. Markets will respond, and they can't respond fast enough, so prices keep staying up. And of course, what they modeled was the obvious econometric model. If the demand, which is being pushed by mandates and requirements and subsidies, keeps running ahead of the supply, which we know for a fact it will if the mandates stay in place, because we know the supply can't expand at that velocity. because there's no history of that ever happening. So they just did a practical model. What would it mean, they asked, for metals prices broadly, and what would be the implications of that for the world's economies? Which is the question, I guess, if you're an investor and if you're a politician, you should ask, because in one case it's money-making opportunity, in the other it's career-ending. So, because if we get systemic metals inflation, what we'll have is the metals commodity inflation will impact other products and to be inflationary. So what they concluded, to cut to the chase, was that the energy transition plan will create upward pressure on metal prices broadly, taking metals to record levels and for the longer period than has occurred in a century. That we'll have a decade of hyperinflation in metals commodities, which is unprecedented in a century. So this is bad because, let me give you a specific example. We know, for example, with aluminum, what share of the cost of building things out of aluminum, the purchase of aluminum comprises. Right, heavy equipment, about 10% of the cost of heavy equipment, industrial equipment, is tied up in the purchase of aluminum. Just the data point, the USGS did an economic analysis. So if you know that, and if you also know that let's say the gross profit margins of that industry, about 10%. Their profit margin is not, it's a profitable industry in the sense that big numbers, but it's typical of big industries. Profit margins are like 10 percentage points, 15 sometimes. If your if one input has 10% of your bill of materials, and I cause a 300% inflation or 400% inflation on an input, you could do the math here. It wipes out all your gross margin. So what you do is you either go out of business or you raise the price of the machinery. And you raise the price of machinery by the cost of the material raise, which is inflationary, because a 200% increase in the metal resulting in, I'll pick a number, 10% increase in the product. Doesn't sound bad, except 10% increase in a final delivered product is deeply inflationary, especially in a world that's accustomed to the net marginal cost of important capital equipment being stable or slightly declining because of manufacturing efficiencies. So what they basically predicted is a deeply inflationary, not just commodity super cycle, but because the commodity inflation is so broad across all these metals and so deep globally that it causes global inflationary pressures. I think, this is my opinion, long before we get to 10 years of global inflationary pressure from those metals, the dance will end. Markets won't tolerate that. Governments won't be able to tolerate it. It'll end. So the real question is, if I'm a politician, I'm hoping that doesn't happen while I'm trying to get reelected first. So when does it start happening? Based on the data we're seeing, it starts happening in the next year or two, certainly the next several years. So this is career ending in the near future because it's within the political lifespan of many of the policymakers. So they have a problem, in my opinion. As an investor, it means that, copper, for example, if you're a commodity investor in copper, I'm not, but if one were, copper commodity prices came down last year off their 2022 peak. They're still up about 200% last I checked over 5 years ago. And that's about the trend. That's what we should expect, a couple 100% price increase over the next 5 years. That's a pretty big deal because it's not going to go back below unless there's an epic destruction in copper demand, which would come again from a deep recession or abandoning the plans to use too much copper to make cars. Both could happen. I mean, that's the scary thing for your copper miner. Both could happen for other reasons, including what the Fed's doing here and central banks in Europe. You could tip the Western world into deep recession, which pushes off buying decisions, kills demand. Copper goes into oversupply because we aren't building the electric cars fast enough because nobody can afford them because you're in a recession. So you have a down cycle. That could happen. That's not a black swan. That's normal in markets that are being manipulated. The inverse could happen. Mandates could be pushed. Economies could do okay. I'm very bullish on the economies tolerating these insults and then pushed at them. So we already see it in consumer behavior. It's been very resistant to the insults the Federal Reserve has pushed on it and central banks. Consumers have pulled back their spending a bit, but they're not in depression spending mode at all. So economies are still pretty strong. So that's inflationary. And, we could end up with stagflation, right? Which was the horrible status of the world in the late 70s and early 80s, where growth wasn't really great, but it was still there, pushing up demands. Inflation was still happening, even though demand was softened because of the structure of markets and what had happened in monetary policy. So we're going to create stagflation for a slightly different reason as a good outcome, I guess. I mean, that's in a weird way, we're sort of heading towards three outcomes. Everybody gets sane and we get growth again, let markets function. I think eventually that happens, but not in the next 2 years. So the two choices the next 2 years are enervating stagflation or recession. If I'm an investor, the recession is scary because that drags everything down, and it's pretty hard to find safe harbors. So that you're kind of hoping for where we are. We're really, nobody's saying it. We're really in a stagflation situation. Growth globally has slowed. Inflation hasn't slowed much. It's off the 2022 peak, but it's still in the Western world at a 45-year high. I mean, we're really at epically high levels. In the U.S., it's at 6%, trailing. It was at 9%. 6% inflation is grotesque unless you're in Argentina, which would be a rescue.
That would be a good place to finish on, I think. But I want to ask you about something that you did an extremely good job of laying out to people, which is a particular part of the energy storage challenge. Not so much the resources side, but the idea that energy production and demand is very seasonal, which means energy storage is going to have the capacity to provide energy on not just a day-to-day, equalizing the grid demand spikes, but on a seasonal basis as
Right.
well, which makes the challenge extraordinarily larger.
It's staggeringly larger. We don't have adjectives sufficient to describe how astonishingly large the challenge is. Yeah, the wind sun variability has three features. The one that you said is everybody knows the diurnal feature, and people have talked about getting grids to have 4 hours of storage is the bogey that people think will allow you to handle diurnal because wind and sun sort of overlap. So there's all wind solar grid managing diurnal variabilities could probably be managed on 4 hours of storage. If you think about it intuitively, that kind of makes sense. And set aside that 4 hours of storage at the grid levels for countries are trillions of dollars of batteries, by the way. The battery costs, say it again, are not going down. So the storage can't be done with batteries. It'll have to be done with pumped hydro. All of it's expensive. All of it's more expensive than making the electricity in the first place. But with wind and sun, you have to store. Or you have to deal with the other feature to your point, which is when you plan grids for decades, not for diurnal variabilities. You plan them for seasonal variability and for meteorological phenomena over decades. And why do I say the latter? First, the former. Seasonal variability is true everywhere. I grew up in a northern latitude. There's a lot more sun in the summer than the winter. It's beyond obvious. But wind is equally variable depending where you are geographically. The seasonal variability in the quantity of energy a wind turbine produces or a solar array produces can be 2x depending on where you live. So you could have twice as much on season as off season, or put differently, half as much off season is on season. It could be 3x in some areas and only 1.5x or 50% in some. But geographically, we know this data. It's just meteorological data. We know about seasonal variability. It's very easy to predict. So if you're going to have lots of wind and sun on a grid, beyond obvious, you have to build a lot more capacity to handle, let's just use a 2x. If you're going to have half as much sun in a latitude in the winter season than in the summer, and you want to deliver the same unit of energy, you have to build two for one. 1 megawatt of gas turbine has to be replaced minimally with 2 megawatts of solar or wind turbines that take account the seasonal variability. That's not counting the diurnal variability. Diurnal variability adds another 30 to 50%, assuming you have batteries. That's not nothing. I mean, in some cases, it's a 3x increase to handle seasonal variability. That's a very big deal because it means that the parity that you've been parroting, that wind and solar are at cost parity in the grid, they're not at cost parity at grid scale for long cycles, what grids are supposed to run. If you have to build 3 units of a power plant to get the same average power over a year because of seasonal variability, then it's 3 times more expensive than its face nameplate capacity. That's problem one, which is generally ignored. It doesn't matter if wind and solar are 10% or 15% of the grid, and you've got lots of gas hydro, nuclear, wind. You have lots of stuff on a grid. You have an oversupply, and when the seasonal variability comes in, you just make it up, which is what's been going on in the Western world until now, until we push more hydrocarbons off grids because it's easy to store oil, gas, and coal. It costs virtually nothing. It costs about 50 cents a barrel and about the same in barrels of oil equivalent a month to store a barrel of oil or barrel equivalent of gas for a month. 50 cents, 25 cents in some places, a buck in some places. This is really cheap. To store the barrel oil equivalent of energy in a battery is not 50 cents. Depending on the batteries you use, it ranges from about $20 to $100. But let's just use the low one. So instead of 50 cents to store a barrel of oil equivalent of energy, I got to spend $20. This is a very expensive way. It's not a little more expensive. It's 40 times more expensive. This is a profoundly expensive way to store energy. The big problem of the multi-decadal period when you're building for grids is that you have wind droughts and solar droughts that are absolutely predictable that they will occur for very long periods of time. By that drought, I mean days and weeks for which continental areas have zero sun, or days and weeks in which they have zero wind, complete drought. That we had a wind drought off the North Sea, as you know, before in the fall of 2021, before the invasion of Ukraine, which caused epic increase in gas prices as the markets in England and Europe chased natural gas to fill the hole. Nobody knows why they happen. They're very difficult to predict when they happen. They're absolutely dead nuts easy to predict that they always happen. So what you'd want to know is how often do they typically happen over a 30-year period? What's the frequency based on trailing meteorological data? And assuming that the future is roughly the same as the past, set aside climate change making it better or worse, the best you can do is roughly the same. How often would you have the continent of Europe or the continent of the United States in a wind drought for how long? The whole continent with no wind, or contemporaneously cloud cover of the whole continent, which is no sun, and be calmed, which also happens. How often does that happen? We know. So one really important study was done for the continental United States, looking backwards at 4 decades of data. And you model a grid based on no storage and ask how much storage do you need if it was all wind and solar, or half wind, half solar, whatever combination. And you'd want to know how many days would you have no power, or put differently, to avoid having no power for 30 years, or never have a period of time more than 1 day where you black out the country. How much storage do you need? How big does the grid have to be? You needed to answer both questions. How big does the grid have to be? Because it's always windy somewhere means that I'm building excess capacity elsewhere in building transmission to get it from A to B. Always sunny somewhere, okay, means excess solar capacity somewhere, enough transmission to get there. So the bottom line of studies that look at these factors for the United States would be very similar for Europe, somewhat similar latitude. So you get the same results. Over a period of 30 or 40 years, if you had a grid that was 50-50 wind solar, you'd have to build a grid that's roughly 5 times bigger than the existing grid. So not twice as big, but 5 times bigger. It's a lot of capital. And you'd still need roughly 5 days of storage. You need trillions of dollars of batteries. If you want to make the grid only 3 times bigger, you need 30 days of storage, which is hundreds of trillions of dollars of batteries. You need quantities of storage that are off the chart huge if you want to run an all-wind solar grid. Fully interconnected. This assumes 100% interconnect of a national grid, or 100% interconnect across the European continent from Oslo to Florence. The seamless supergrid. You still need to build the grid 3 to 7 times bigger than today's total grid, and you still need weeks of storage. This is delusional. I mean, we don't have that kind of money, and we don't have the machines that'll make it cheap. Maybe we will one day, but that's where the delusion comes in, to think we're going to build continent-wide grids at a price anybody can begin to afford that'll keep the lights on. And it's beyond obvious. And we're just talking about the lights here. I'm not talking about building extra electricity capacity to make hydrogen to run airplanes instead of using aviation fuel. If you add that factor in, then the 7-fold increase becomes a 20-fold increase. I mean, the numbers in terms of scale of the infrastructures that provide our energy are insanely big. And that's why I say it's delusional, because they're just insane numbers. And as policymakers begin to ask how much they have to really build, it's essentially what the Europeans did facing the loss of Russian gas and oil. Then discovering that, they didn't build more wind turbines in a crash program in 2022. As you know, wind orders collapsed in Europe in 2022. What they did is they built more LNG terminals because they could build them fast and they could deliver astonishing quantities of energy very quickly.
Yeah, that's a bit of a giveaway, isn't it? The energy that they turn back to is coal and gas infrastructure rather than like
Yeah.
expanding their renewables output. To sum all this up, it seems to me it's all a massive case of cognitive dissonance where we believe we're going to achieve net zero by 2050, but we're not actually doing the things that we need to do. We're just sort of presuming that technology will somehow do it for us, which doesn't seem a good way to do public policy, despite the fact that you've laid out this impossible or implausible case for us. You call yourself on your podcast the rational optimist, not the rational pessimist, as I would call myself if I had podcast. And your book focuses on things that will make all of this significantly easier. It's about the cloud revolution. So take us through why, despite the fact that you're so, you've done all this research, you're so well versed in explaining why the energy transition can't happen in the way it's imagined, you focus your work, at least at the moment, on positive changes and optimism around the world.
Well, first, I'm optimistic that the Western world will, and it already is, like the evidence is in, recognize that the transition path as imagined isn't going to happen. I'm not suggesting that people are going to abandon subsidies and abandon windmills and desire for electric cars, or even abandon the language of transition and stuff. That's not going to happen. What will happen, because it has to happen for economic, fundamental human need, is that we'll redound to a kind of energy realpolitik. And that's already evidence in Europe. I think we're on track to that, which is a good thing. And that won't, again, it won't mean we're not going to expand wind and solar by at least twofold. And that won't, we'll probably see at least another 100 million electric vehicles in the world in the coming decade. I think that's baked in. So I'm optimistic that'll happen because I think it's already happening. It glimmers. Again, the narrative isn't going to go away, and people aren't going to say, "Oh, I'm wrong. I'm sorry. I made a mistake." What they want to do is look to not have catastrophic outcomes uh, and keep economies functioning. And they're going to get lucky in doing that because we're going to be wealthier. My book's focus on wealth creation from new technologies is not that because we have new energy technologies that make us wealthier. That revolution is behind us. The next one on that is a long way in the future. It's the new technologies of wealth creation in terms of how we use energy, how we transport ourselves, how we manufacture things, how we make materials, how we provide services. The whole penumbra of things that society does for entertainment and health and environmental protection are all technology centric. And my main contention in my book is that the combination of revolutions, with the cloud at the center of it, because the cloud is phenomenologically different than the internet, which I'll explain in a second, but it's a different thing. The combination of compute capacity, the hidden revolution in material sciences, which is profound and deeply underappreciated, and the big changes in the manufacturing machinery, the kinds of machinery we can make things from, the precision machinery, the machinery of the 21st century that manufactures at molecular scales, and our ability to really change healthcare in ways that I think we're going to be finally animated to pursue after we get over, in my view, the misapplication of policies during the pandemic and a recognition that we can do better. I think we get over the finger pointing and the blaming, all of which is appropriate. A lot of blame to go around. We'll read down to figure out what we can do better. We've done that. We've done these things before, but we have technologies to do better now, and they're anchored. They're anchored in the fact that we moved to an era of inference computing. The cloud is not a computer anymore. The internet is not a communication system. People know that when I say it. The internet is as different from telephony as the cloud is different from the internet. The internet, when it first came along, allowed you to do email, visit websites for stores, use the telecommunications system, and then expanded it. The cloud uses the internet and the communication systems, but doesn't just do computation and connect websites. It doesn't just do social media, although it's a big function for information websites, the kinds of things that we're doing, which are not trivial. The kinds of, you know, lubricating the economic change of ideas through Zooming and internet is really non-trivial. It's important. It's an incremental distinction that makes a difference, but it's not a revolution in the way that going from computation to inference. So computers are now used not to compute, but to give advice. That's what inference is. Put simplistically, when you use your phone or your car to provide you with navigation advice, it's not making a calculation that has a specific answer. It's looking a whole set of variables: traffic, often weather, where you are, where you want to go. Often it does predictive things. What, as you know, you can ask what the travel time will be like at a point in the future based on inference. This is inference, not calculation. Imagine taking that inference function into areas that are really difficult, which is diagnosis of medicine, supply chains, on how do I change the manufacturing process, take into account the changes in prices and markets, what's happened to a mine somewhere in Chile. All these factors are increasingly available through the network the cloud has access to. And it has inference engines, that those things that we call machine learning, call this misnomer artificial intelligence. So the chat GPT revolution is really called the tip of the iceberg. It's more of a parlor trick and stunts now that's scaring people or making them excited than really the high functionality of artificial intelligence in the skilled tasks domains. These things, which I outline in my book, are really consequential. They're just beginning to be rolled out. They're just now becoming practical. ChatGPT is a first example. Pretty useful, democratized, you know, semantic AI, right? I can address it in words that I would normally use. It answers me in the way I would like to be answered. And you can even tell it how you want it. I want you to talk to me in Cockney. It'll give you back, you know, you don't have to have the King's English or Spanish. This is a this is a distinctive difference in accessibility of computation and inference. So I think this accelerates the economy. It's not an acceleration that's easy to predict in the sense of it's going to happen next month or this next quarter, but I think it's highly predictable in that it's inevitable and it's coming in this decade. So wealth creation, which technology creates, creating more productivity, is forgiving in this sense. It's both economically and politically forgiving. The wealthier we are, the easier it is to make mistakes, spending our money on things that are dumb. This is true for us in our personal lives. It's true for governance. So I think that's one of the reasons I'm optimistic that we'll be able to tolerate the misdirection of energy markets. We can afford it. It's the other reason I think that the energy markets will change profoundly in the further future, because the technologies that we have available to develop, for example, and manufacture a next generation nuclear power plant are profoundly better than they were in the designs that were find their origins 50 years ago. And we are accelerating that market. Not an acceleration in the sense that of the digital era where you can create a new app and get users in weeks and months. You know, the Chat GPT went from 0 to 100 million users in 30 days. It's a record. No app has ever done that. No piece of software, no commercial product. But it's bits, not atoms. And they can't expand any more than that till they build more atoms. That is, the machines that run it, the supercomputers that are behind it, which we'll build. They take a little longer. But that velocity is important in the sense that it's the information and inference amplifiers that allow us to shorten the times for the hard things like mines and oil wells. In fact, we already know, to give an example, what the mining industry could eventually find itself with a compression of time. Building offshore oil wells is a long, big process, like mining. They're billion-dollar platforms. They usually take 10 years from decision to operation. The most recent offshore production platforms have gone from decision to operation in 5 years. Now, 5 years is a long time if you're worried about commodity price inflation, it being sticky to get move production in line. But 5 years is awful fast by historic standards to get something of that magnitude going. Just as the Germans built their LNG terminal at 8 months from decision to commissioning, this kind of velocity is a direct result of the improvements in the information economy we have and bleeding through into the physical industry. So I'm optimistic that that will bring broad wealth formation in the next decade, which will create energy demands more than most people realize. We're going to have a lot more robots and drones, be a lot more flying in terms of autonomous flights of cargo. That's net energy consuming, but it's net good for the economy. It reduces the friction in markets. Well, it will I'm optimistic that because that comes at a time where we've made an epic mistake at squandering trillions of dollars on mistaken directions for energy markets. When we finish squandering the trillions and we slow it down a bit, we'll still expand wind and solar, but at a less torrid pace. And it's a $100 trillion global economy, roughly, right? So, and I'm not being facetious about wasting money because we need to solve poverty more than we need to solve climate change, in my opinion. But that's my moral anchor. But if we squander a couple trillion a year out of $100 trillion economy, I think that's very bad. But in markets, those things happen all the time. They're far more tolerable in our era than they were 20 years ago. So I'm optimistic for that reason. And I'm not optimistic that human nature will change, that we won't still have narratives and there'll be cycles and bubbles. In fact, I'm hopeful that I get smart enough to invest on the next narrative hype cycle and make some money and get out before it crashes. I mean, I'm not a day trader, but I would say I bet on longer cycles. The multi-year, not multi-decadal cycles. So that's the reason I'm an optimist, because I think we have, not because of any brilliance on the part of the political class, happen to live at a time of a confluence that really echoes what was going on in 1920s, which is partly why my book has a subtitle, The Roaring 2020s. The phenomenologies that are going on and the structure of the markets, and including, by the way, the political chaos in markets, all look a lot like the 1920s globally. And we came out of a horrific pandemic then, a horrible war, and the world flourished the next 80 years. Doesn't mean, an optimist doesn't mean you're naive and a Pollyanna. The 20th century saw another war. It saw pandemics and saw recessions. Human beings induce those things. They do those things. We'll do it again. But I think the key difference between how most people see the future and how I see it is that we'll still have bad things because we're human. We make mistakes. We love and hate each other. But the growth potential that we're facing in the next several decades, it looks unlike anything we've seen in a century, and it's a terrific time for innovation, and I guess you could say a terrific time for experimentation, including the kind of political experimentation we've been engaging in misdirected allocation of capital, how to produce cheap energy.
It sounds as well like a big change and improvement in our standard of living, how we can live, and people to sort of ignore and forget about how that's improved over the years. I'm sure people will be disappointed to hear that the narrative won't change, and the politicians who've been pushing the energy transition won't get up and say, "I'm sorry, I was wrong. This was all a load of
Oh,
nonsense."
what happened?
But I would suggest that the divergence between the narrative and what's actually happening on the ground creates a good investment trend,
Yeah.
both in the sense that the narrative and then also the eventual correction. So hopefully that's the two profitable opportunities here. Please do check out Mark Mill's podcast, The Rational Optimist, and his book, all about the cloud revolution. Mark, thanks very much for joining us, and to everyone at home, thanks for watching.
Thank you. Pleasure to join you.